Hello, guys, and welcome to the live stream for the trade that we called out earlier today. And we'll be kicking off with the explanation, the analysis, and a few commentary for the trade that was called out earlier today. All right, so stay tuned to the end of this video so that you can enjoy that. Okay. All right, so for the trade earlier this morning, we sent it out to our Telegram group, and we were sure that most of our guys there were able to take advantage of the trade. So if you're able to take advantage of the trade, you can drop a comment in the comment section or the Telegram group. You can just let us know that you took the trade. The one we called last week on the free Telegram group, I think there was I can't remember his name now. There was someone who took advantage of it and he made some pretty decent profit off it. I can't remember his name now. Yeah, I think he made about $1,000 or so on that particular trade. I don't seem to get my head around. Okay, yeah, I remember him now. He made about $1,400 on that trade, and I think that was pretty decent for him. Whatever challenge is on, whether it's on a challenge verification phase or on the live account, that was pretty decent. All right, so you should also be part of the Telegram group. To be part of it, I'll drop the link. The link is already in the description section of this video, so you can watch it at your leisure so that you get first-hand information on this, right? Then we have our guys who are on our student group. We give them updates like this on a regular basis, and we give them more breakdown of how we come about this trade, and we teach them how we get our conclusions after such analysis. So to be part of that, you have to join our paid students Details are also in the description below, and you can also WhatsApp our official WhatsApp line. We get the full details of what you need to know about our paid student and how you can be part of it, so that you'll be able to make such analysis yourself and you take advantage of such opportunities. All right. And then finally, the final group is those who have bought a consummate prop account through our link. All right, consummates are preferred prop firm at the moment. So those who have bought a consummate prop account through our link, you also have access to this information firsthand. And of course, we have the free group where we drop this kind of analysis once in a week, or sometimes once, sometimes twice in a week. We drop chart markups so that they can take advantage of it. So that's for the free group. But for those in the other group, we drop chart markups on a regular basis. We try as much as we can to drop chart markups on a regular basis, and then we also do follow-up classes to know how they fared. All right. So straight to the business of the day. No time to waste time here. Okay, so for today's trade was a GBPUSD long, right? GBPUSD is kind of my one of my favorite pairs, and it has good volatility and good price movements for what I need in a day. All right, so that was why I most likely prefer GBPUSD on my trades. All right. I think this was a trade we called last week. 33 pips, yes. This was a trade we called last week. We had some other trades on Friday. We didn't trade on Monday. All right, so for those of you on our page group and the those who have bought management prop accounts, if you noticed yesterday we didn't give any chart markups. That was because we didn't trade on Monday, and the reason for that was that the major banks, which include the US banks and the GBP, they were both on bank holidays. Some other banks like in I think two countries in Europe, about I think French and Germany, they had bank holidays. Then I think the Swiss, yes, SNB, or the Swiss banks, big banks in Switzerland, they were on holiday. So major banks were on holiday. That was why there was no volatility in the market. The overall move for yesterday was about 30 pips, right? So for all three sessions, so it was very quiet. It was just retail manipulations here and there. So we decided to just stay out of the market and wait for today. Right, and today we got the big fish. Right, some of our guys are still in. I think they should have closed by now. Some of them should have closed their trades by now. Most of them should have closed their trades by now. Right, what we called in the morning earlier on was a target of 30 pips. We wanted you guys to be safe and to be able to lock profits and save and pay yourself. Yeah, so I think this was the target somewhere around here. I think somewhere around here was what we called for most for the guys on the group this morning. So I'm going to give you straight rundown analysis for how we came about this particular trade, right? So first thing that we saw was a bullish divergence, whether bullish or bearish. We saw a divergence on GP between GBP USD and um, dollar index, right? So we saw a divergence on GBP USD and dollar index. That gave us a hint that GBP USD was about to go long, right? That was the first hint. Now the second hint was where the second confluence that we got again was that when that divergence happened, GBP USD was below Asian range, all right? So while GBP USD was below Asian range, we had a divergence. That is the second that was the first confluence that we had. So those two joined together gave us much more confidence that GBPS was going to go long. So we checked our value flow models. We have about two value flow models. We have the pound flow and the bonds and bullions that we use here on the floor to get extra confluence. So for sentiment, we foresaw a stronger Great British pound and a weaker US dollar this morning, right? So that was the third reason why we took the trade. So when we were expecting a stronger GBP and a weaker USD, that means it's a long for GBP, all right? Then structurally, we saw that for the most of last week, GBP was on a stop hunt spree, all right? It was taking out all these stops. And I think we marked this out last week. So it took out all the stops, and then it finally got into um, this particular region, and then we were expecting some bullishness. All right. So if indeed this is a sell trend, we're expecting retracement. Say maybe using this swing, we expected as at the time we took this trade. All right, so price was still at discount. So discount is below 50% of your fee. So price was still at discount. We expected some retracement to at least equilibrium or premium, right, using this particular swing. Okay, but using this other swing, which is a bit longer, that is like the weekly swing. This is for the daily. The first one I showed was for the daily. Using the weekly swing, see that price is still a bit far away from premium. We have a fair value gap here that has not been filled up yet. All right, so we still expect the Great British Pound to buy a little further. And our value flow models are still telling us that Great British Pound is bullish, maybe for the most part of this week. Maybe the reason why I said that is because we do not own this market. We only speculate, analyze, and we take our trades in the direction of our analysis. All right, so good or bad, that doesn't make you a bad trader. Okay, so we are still bullish on GBPUSD for the most part of this week. All right, yesterday closed bullish. Today we expect it to also close bullish until price gets to at least around equilibrium or premium before we continue the GBPUSD short. All right, but for now we are bullish on GBPUSD. So structurally, we've been seeing GBPUSD trading higher. Okay, all right. So that was the most things that we saw this morning. So we used a basic market structure on the 1 minute and on the 5 minutes, right? I use 1 minute. Some people laugh at me when they see me using 1 minute, but then I'm a lover of precision entries, right? So whatever name is being called in the market, there, all I know is just that I like taking very precise trades. Okay, so on the 1 minute, I looked for um, a change of structure, all right? So price cleared the low here, cleared this low, and also cleared this high, making this level a breaker block. So if you look at it on the 5 minutes, you see that that is a clean breaker block there. Okay, let me forward my chart. Okay, so that was a breaker block. This particular block here, let me outline it. That was a breaker block right there. It's an order block that didn't hold, and so it became a breaker block. Okay, and then after price closed above it, briefly price came into it and tapped it. So if you're looking on the 5 minutes, you may possibly not have seen when price came to retest the breaker block, but on the 1 minute or on the 3 minutes, it was very clear. Because I'm a day trader, I take note of small time frames for entries, not for direction, for entries. Okay, so look at it on the 1 minute here. Let me zoom in a little more. All right, so after price broke above it, came back to test the breaker block. Boom, I entered the trade. After confirming, we sent out the trade markups to the guys on the Telegram group, and boom, look at this beauty. All right, so our target was um, the first target was for price to take out this liquidity and trade into this fair value gap and into this other block. Hence, we called out this, and this was 30 pips. It's decent enough. If you are using, if you are risking 1% on your account or your trading account, you should be 3% up if you are taking this trade. All right. For some of our guys, we still have a bullish bias. Some of them are 80 pips in. All right. So right now we're expecting a retracement maybe before New York or early New York session. We expect some retracement down to this level. All right. So even if you can fib it, if you can fib this level, you see that this level confluences with equilibrium and discount level, and then this breaker block right about here. So on the 1 hour, it's a bit more clearer. Okay, so this breaker block on the 1 hour, we expect price to trade into it and then continue buying back all the way up if indeed this bullish trend is going to hold, which is what we expect to see in the market. Okay, so that was how we came around that particular trade setup. Okay, so immediately price traded into this block here. On the 1 hour, if you're using 1 hour, watch immediately price traded into this block here. It started moving back up. Okay, so as simple as that. We just like to keep everything simple, no complication, no high-end vocabularies. Just keep it simple. The goal is to make money, not to be right, not to compete with anybody, just to make money and get out of the market. Okay, so that was how we were able to get that trade and how we exited the trade. So exiting is as important as entering so that you don't end up playing around the market and not having anything to show for it. Okay, so like I said, we're expecting price to come back to this other block here, the breaker block kind of somewhere around here, trading into it and also trading into what we call the IO Fed. Okay, now I'm bringing vocabulary. I'm sorry about that. So we expect price to get back into this breaker block somewhere around here, and then we should see it as a decent retracement into discount level. Like I said, discount is below 50% of your fee. Premium is above 50%. So we need a discount for a buy. So if you're buying, you need to buy cheaper. So we need to see price come down around here. That will be way more affordable for us to continue buying this pair. Okay, so guys, that is it. If you wish to join our community to get this information firsthand, you know what to do. Click on the link below and join. If you haven't subscribed, please like and subscribe to our channel to get more content like this firsthand as it comes up. Okay, so that will be all for today. Cheers and see you next time. If you have any other question, just ask in the Telegram group. We'll try as much as we can to put you through. Okay, so that will be all, guys. Thank you for watching. Don't forget to like, share, and subscribe this video if you found it helpful. Until next time, wish you good luck, good trading. Cheers, and